Welcome guys to the new weekly outlook. Today we have different theme on the charts, dark theme, so we'll see how do you like this one. Let me know in the comments, but it's changed a bit. So as always, we're going with the economic news calendar. This upcoming week is packed with the news. Like we can see on Monday, we even have the Fed Chair Powell speaks, which we need to be careful of, and it's late in the New York session, so this price action might be choppy prior to the news. On Tuesday and Wednesday we have the also red folder news. On Tuesday I will also say to be careful because it's at 4 p.m. so 1 hour, half an hour after the New York Open. On Wednesday we got also majority of the red folder news. Thursday as well, and Friday also we have the NFP, non-farm employment change. So on Thursday we need to be really careful because it is the day prior the NFP news, which is always the first Friday in the first week in the new month. So these are the big three red folder news and we need to be really careful of them. So on Monday and Thursday and Friday always we're going to be trading after the New York Open. But on Monday and Thursday you need to be extra careful with the price action. If it's really choppy, it's better to avoid it completely and just sit flat on the hands. Less is more. The less you do, the more you make, and that's the game in the trading. I dropped the article in my X and on my Substack, so feel free to check it out. So let's start with BTC today. On the monthly time frame we have the monthly breakaway gap, and it's obvious that the previous month low is going to be the draw on liquidity. On the weekly time frame we have been respecting the pivot context right here from this FEG, and we are ready to move lower. I'm expecting next week to see this low potentially get tagged, because if we get a good close today is the weekly close, if we manage to disrespect the previous week low, the next candle is expected to be continuation to the lower side like this. So this is a pretty good scenario. And on the daily time frames we also have the daily push internal towards the external range contexts. So I'm expecting to fill that FEG and to move lower from there if we get the confirmation inside of that daily FEG. Once we go inside of the daily FEG, it is also overlapping with the previous day high, like you can see right here. We need to get some order flow shifts, so that meaning from daily we need to see 1 hour or 4 hour order flow shifts to the lower side to confirm our bearish idea and to get some shorts in. As well, we need to check for the order flow. Do we have any opposing PD arrays? So the bias is bearish, we are looking for shorts. On the Ethereum side, basically the same scenario is outlined, but the only problem is that on the daily time frame we don't have that FEG right here like we do have on BTC, which means that BTC is much weaker, and if we are going to short we need to focus on weaker assets. So that is why the BTC is on my watch list, short watch list. Let's see only HYPE as the altcoin because it's the best one so far. On the weekly we have the FEG pushing us to the previous week high, internal towards the external range liquidity concept. But we have one problem. We have that opposing PD array on the daily time frame, which we need to disrespect. So from this weekly we have this opposing daily right here. This is the trapped order flow. What do we need to see here? We need to see disrespect of this previous day high, which is also the rejection high, because it is rejecting that FEG. So we need to get candle closure above that high in order to go towards this swing high as the next target, and depending on the reaction of this high we are going towards the previous week high and essentially to the $44 mark on the HYPE. It is the best altcoin so far currently, and if you're trading altcoins, this is the one you should be longing. Let's go with the oil. Oil is in really good space right now. the big thing for the oil is gonna be, are we gonna respect or disrespect this monthly swing high? Because if we disrespect that, that means that we will break out of this, basically calling it a range. We will go outside of it and then demand the previous month high as the next row on liquidity, and essentially these highs right here above $150 mark. So we have the monthly close in 3 days. It's going to be really important, because if we sweep it, we might have some choppiness in the range back again. If we go to the weekly time frame, what do we have here? We can remove this one. We can see that we have the previous week high as the draw on liquidity. These are the equal highs that are left. It is not tagged. These are the equal highs. And what do we have here? We had the sweep of the liquidity of the previous week low. And with this huge respect week, that means that on the lower time frames, we have the bullish order flow pointing us to the upper side. And on the daily, we had the daily breakaway gap right here. We had some chop, but it's pulling us to the upper side. On the previous week high, we can see previous week high, daily swing high. It is not tagged, like you can see here if we zoom in, which means those are the equal highs. There is a lot of liquidity resting there. So with the open, I can expect this one to get tagged immediately, and depending on the reaction, if we disrespect it, there is no resistance right here, so the price should be free to move towards the external range liquidity. And this candle is looking really, really strong, disrespecting the previous candle high, meaning that the next candle is expected to be continuation, and this is the first row on liquidity. It is in my long watch list, like you can see right here. Let's see what are the commodities doing. Commodities had a huge dump, but they are currently respecting the monthly FEG, monthly breakaway gap, like you can see right here. Here it is the pivot context, 2 candle rejection. We can move higher from this low towards the all-time high, towards the swing high. On the weekly time frame, we have the problem. Why? Because we have that monthly idea, higher time frame point of interest to push us higher. But what do we have on the weekly? We have trapped order flow right here. We created big opposing argument, weekly FEG. We can move lower from here, and we can move higher from this monthly to the upper side. And now basically we are trapped between two higher time frame levels. So one level needs to fail, because until then the price is basically trapped between this and this level. Basically they are in the cage, and there will be chop until one level fails, and until one level gets disrespected. So it's basically just a patience game, just a waiting game right now, because daily is not gonna do much right here. It's not even relevant, just because of those monthly and weekly contexts. One needs to fail. So I'm kinda neutral right here until I get the more confirmation. Now let's see what are the indices doing. They also had a huge dump. Huge dump. We can see right here that they retraced back into the monthly breakaway gap. We talked about this one way before. I called it out in the outlook. So this is the point where we can move higher from. This is the internal towards the external range liquidity context. But this candle is really rough. If we zoom in on the weekly, we can see that we are basically disrespecting the previous week low as well. Right here. We don't have any wick, like so small wick in the body of the previous, in the candle of the previous week, which means that lower time frames are basically just showing lower side. 4 hour, 1 hour, daily, they're just showing that we're going to the lower side, no respect. So this monthly is not giving us much hope right now. Let's go to the daily time frame to see what's happening as well. What do we have here? We are disrespecting the swing lows, making the fair value areas, running the previous day lows right here, and we just draw into the monthly breakaway gap. From here we can maybe chop around, but if daily is continuing to be this hard with huge bodies, we can expect even lower prices on the monthly breakaway gap. So this is the point of reversal, but I will say this is just a good opportunity for buying the assets on the deep buying zones, basically, because we don't have any confirmations, but this is the good time to start DCAing into the positions from here. Because if this one fails, we can move lower towards the monthly breakaway gap, which is the second one right here, deeper in the fair value area. So far, no reactions. We'll see next week how it goes. And lastly, let's go over the king of the forex markets, DXY. On the DXY, I am personally kind of bullish because on the monthly, we are inside of this range. The only opposing argument is this sweep of the swing high, but we still have 3 days to disrespect it. If we disrespect this high, we can expect move towards this monthly breakaway gap. But let me rewind this. On the weekly time frame, what do we have here? We have the external range liquidity marked out. We can see that we are respecting the previous week low with the sweep, and we are also retracing up and respecting the fair value area with this body and with this body as well, wicks. So we also left the breakaway gap, which will not get filled. Like we can see here, it's not filled. And this is the good point of interest to move higher from the previous week low towards the previous week high and towards the swing high. So these are my next targets. Let me rewind to the daily time frame. On the daily time frame, we also created a bullish scenario. We are running the swing high, making the fair value area. We have the breakaway gap formed right here, which will not get filled, but we'll see how it goes at the open because the war stuff and all that. So this is the open scenario, but if not, we can maybe retrace into the fair value area and move higher from there towards the first draw-on liquidity, which is this high, these equal highs right here, and from there towards the external range liquidity. If we manage to go up here and disrespect it, most likely monthly is gonna be closed with the body above this swing high, and then this monthly FEG is gonna be the draw-on liquidity right here. With the DXY being bullish, I'm bearish on all the major assets, NZD, AUD, GBP and Euro. As always, they are inversely correlated. So yeah, this will be it from the outlook. Let me know what you think in the comments. Do you agree with my analysis? And let me know what do you think of the chart colors. Is it better or worse than before? Safe trading next week, guys, and enjoy. Peace.